So again, wanted to welcome you all for tonight's presentation. Let's go ahead and get started so we can get done on time.
More than 5 billion people around the world continue to struggle with money and financial illiteracy.
It's Madison Avenue manipulation, right? It's been going on for years and we buy into it.
How bad is financial illiteracy?
It's not taught in school, so people don't know this naturally.
Oh, you're right.
So you grow up not knowing anything about it, you make a lot of mistakes along the way, and we're hoping to educate them and teach them how money really works so they can learn the cause and effect of all this.
And it doesn't have to be generational.
Exactly,
No.
exactly right.
Break that cycle.
Once you understand the basics of financial literacy, it changes your life. The secret is financial literacy. I mean, teaching your kids how money works.
I think it's really understanding how money works.
Once they understand the basics of how money works, they shouldn't have to struggle for very long.
Steve Siebold and Tom Matthews are the authors of How Money Works. Stop being a sucker.
Money means possibility. It means opportunity. It means freedom. Things you've always wanted to do, dreams that you have. Money makes it possible.
You know, of all the interviews we've had in the last 6 weeks, I'm actually most encouraged by that one.
So welcome again. It is so great to have you all here with me this evening. For those who do not know me, my name is Shantae Moore. I am a certified financial educator, and I will be teaching you this Elements class for the next half hour. We should get done in 30 minutes or less. So I'd like to welcome you to the How Money Works Elements educational series that's taught this evening on Zoom. This course is based on the groundbreaking book, How Money Works, Stop Being a Sucker, with now over 500,000 copies in print. And How Money Works is the first of any financial education book that I truly believe that anyone from any age can enjoy and benefit from, literally from age 10 all the way to age 100. I tell people all the time, this is my personal favorite book on personal finances. And I've been doing this for over 15 years. But I love this book because even right now, my 12-year-old daughter is reading it. And I share it with pretty much every single client that I work with. But anyway, speaking of the number 100, the book has now been featured on over 100 prominent TV shows, including CNBC, CBS, ABC, and Fox. The How Money Works book has also received a rare endorsement from the national nonprofit, the Heartland Institute of Financial Education. That nonprofit promotes financial literacy in the workplace all across the country. And the book has been reviewed and referenced all over the internet, including the popular online financial publication Make It by CNBC. If you're on Instagram, you can follow How Money Works at How Money Works Official, where you will receive practical tips and helpful resources. And if you have not received a copy of this book yet, contact me by however you receive the login information to this webinar, and I will be happy to make sure that you get a complimentary copy. Just send me an email. Email is the best way to reach me with your address, and I'll get one out in the mail to you. Our class tonight is titled ShortTerm. It is the fourth of 5 elements. And once you complete all 5 elements, you'll earn a certificate of completion, which is signed by the authors of the book and also by myself. And also students who attend at least one of the elements classes can also take advantage of a free 30-minute consultation with me. I'll share that information later at the end of the presentation. We are trained to help you watching this webinar, we're trained to help you chart a course to financial independence using our 7 money milestones methodology. And don't worry if you did not catch the other 3 sessions, foundation concepts of protection. These workshops are all independent of each other, but I know that I host them several times throughout the month. Also have recorded presentations. So we will constantly be doing these on a rotating basis. So don't think that you're missing out on anything. Everything will be shared on the screen and you'll be able to catch right up with everything. So this element tonight is all about what to do right now to get your financial house in order. I tell people, the number one question I always receive is, Shantae, I want to better my finances. I want to save more money. I want to do, XYZ. How do I do it? What's the first step that I should take? So that's why I really like this class, because we're going to tell you exactly what you need to do right now so that you can get that peace of mind that you're looking for, that confidence in your present situation, and also so that you can start positioning yourself to build wealth for the future. So let's go ahead and get into it. As I mentioned earlier, we use a 7 money milestone system. We're going to start with milestone number 3, which is creating your emergency fund. And why are we starting with that? Because this is something that you could be and hopefully are able to do right now. Now, any typical financial professional will always recommend that you save at least 3 to 6 months of your annual income just to prepare for those unexpected expenses. It seems like we always have some unforeseen medical bill, or there's a home appliance that needs to be repaired or even replaced. Or even car hassles, like something with my truck always seems to happen every month. Or even, let's say, something that could be even more drastic, like you even lose your job and become unemployed. So when we're talking about the emergency fund, I want to just first step back by understanding a lot of people currently, because of the global pandemic that we're still dealing with, we know that people are living paycheck to paycheck. Many people are living that way. And your emergency fund could be, that insulation that separates you from financial disaster if something were to happen. So if you check out these sample annual incomes, you can get an idea of how much you'll need to fit that 3 to 6 month income guideline. And there are really only just 2 rules of an emergency fund. Rule number 1 is your emergency fund is only for unexpected emergencies. That's it. That is all. It's not for gifts. It's not for travel getaways. It's not for sales and to buy one, get one free. And it doesn't matter, if that emergency fund is sitting in your checking account or your savings account, or even some other separate account. I typically recommend a different type of account than the bank. The whole point is that you're not tempted to spend that money on anything but a real emergency. And rule number 2 is that if you actually do need to use your emergency fund, to fix a car, to replace the fridge, pay for braces for your kids, at the end of the day, you don't want to hesitate to use that money, because that's what it is there for. Ultimately, you just want to be in a position where you don't have to resort to using a credit card or getting a personal loan because you didn't have the cash. The main thing is that you just want to, if you have to use it, you just want to start adding money back a little at a time every single month until you replenish what you actually had pulled out. And we just want to make sure that your emergency fund gets full again. So milestone number 4 is debt management. Now, once you work with your financial professional to square away, the other 3 milestones, which is the emergency fund, milestone number 2 is actually proper protection. Once you have those 2 in place, now you want to start talking with your financial professional about how do we manage your debt? Because to be very honest, before you can fully enjoy any financial security and independence, you will need to look at your spending habits and try to reduce or eventually eliminate all your debts. Now, I hate to say this, but in our culture, debt is a sweeping crisis that's perpetuated by a bunch of folks led astray by instant gratification. A lot of people just buy things off the whim and they think that it feels good. And that's just a reality for far too many people. And there's no shame in admitting that you struggle with debt, because it's definitely one of the most common threats to having a sound financial future. But it's really something that we have to face, and is best faced with the support of a financial professional. I tell people, like, having this debt, it's like the pink elephant in the room. No one wants to look at it. It's there, it's glaring at us. We have to address that pink elephant and see how can we just tackle it little by little. So when we think about how much debt people are really having, the average American today has $28,900 in personal debt. And that's not including mortgages. So, and a lot more people have much, much more than that average $28,000. And, one thing that's noted, I found interesting is that over half of Americans suffer from some kind of anxiety relating to debt. When you think about what are folks' number one worry, it's typically related to money. It's typically related to debt that they have. And so when you take the debt off the table, again, as I mentioned earlier, that's when you can really enjoy life more fully and more freely. So things have been hard with all that's been going on right now. And here are 5 tips that, we just wanted to share to help eliminate and stay out of debt. Again, that's the big goal for everyone, right? So the first is to know what you owe. And I'm going to talk about these in more detail in the next couple slides. The second tip is, no more late payments. We'll talk about that in a minute. And, people, I meet a lot of people who are trying to pay down their debt. They might not just be doing it in the best way possible, but generally our tip is just to go after one debt at a time. And I'll share some strategies for that. Fourth tip is just stop charging, stop charging, your credit card. If you have, I think we live in a subscription culture right now. Like there's a subscription to everything, whether it's a movie channel or TV apps or I don't know, gym memberships, just so many little subscriptions that we have, cancel those that are really unimportant and the ones that you're not using. And then the fifth tip is to consider refinancing your mortgage if you're a homeowner, because that could also be something that might be beneficial for you as well. But let's start with each tip, starting with know what you owe. So first, I suggest that you make a list of all your credit cards, all your debts, and all your loans. It's interesting to me how many people who have, different kinds of debts and they just don't have a list of what they actually owe. I tell people you want to write down for every debt, your outstanding balance, your monthly payment, your interest rate, as well as your due date. It sounds simple, but people sometimes think it's tedious. But trust me, you'll feel so much better just knowing what's out there when you really just have your hand on the numbers and the information. So for each debt, write down your numbers and also write down your dates. Then once a year, you should be pulling your credit report from one of these free online services. You obviously always want to make sure that it's accurate and that it's up to date. By law, every American has the right to a free credit report every 12 months. You can actually just go to annualcreditreport.com to get yours. And I actually believe because of the CARES Act or because of the pandemic that this website, annualcreditreport.com, allows you to actually pull it even more frequently now than once a year, just to make sure that everything is on track. So, you want to check the websites of the top credit reporting agencies, from transunion.com, Experian.com, and Equifax.com, because they typically do give you pretty good pointers to improve your score and report errors. Look for the word dispute. I know that there's a lot of credit counseling or credit fixers out there. I actually, if they could get the job done, I've seen them, delete things off your credit report. The idea is that you just want to know what's being reported about you and you just want it to be accurate. Now, if you can find some resources or individuals who can delete certain things, then I also recommend that as well. Now, when we talk about no more late payments, one thing to understand is that, after we just talked about credit reports, late payments, paying things after your due date, it drastically hurts your credit score. And on top of that, you will accrue late fees. So a good credit score, obviously having a good credit score, it gives you opportunities because you'll get lower interest rates on loans. Like if you're trying to get a mortgage or a car, even in new homes. I've seen a lot of, like if you were getting an apartment, a lot of rental agencies are running credit checks because they want to just see how you pay your money on time so that they can know that you would pay your rent on time. So it's very important that you don't ignore these things and that you do maintain a good reporting with the three agencies and try to have your credit score as strong as possible. And, just two quick tips to paying on time. I try to suggest, if you're able to sign up for automatic payments, that way you just don't forget that a payment is due. Or you can set an alarm on your phone or your cell phone, whatever it takes to make sure you're never late. I know personally, I use a spreadsheet, and literally every day on my spreadsheet, I maintain all of my account balances, all of my, upcoming payment dates. So I know what's coming out every single day. And it's very easy for me to look up and adjust every single, every 2 weeks. I know what my expenses are. But again, whatever it takes just to make sure that you make these payments on time. Now, for the third tip, target one debt at a time. I want to really just spend a couple slides on this because, again, I think it's important with every single dollar that you have to be strategic and wise about how you're leveraging that dollar. And when it comes to debt, I see a lot of people who are trying to pay down debt. They just don't have really a strategy for it. Maybe they're throwing an extra $50 on every payment or an extra $100. For me, I want you to be strategic about how do we pay off these credit cards. And generally the best way to pay down those type of debts is just to do it one card at a time. Now you could choose how you would do it. You can choose to pay off, the card that has the smallest balance first, or you can choose the card that has the highest interest rate first. Whichever you choose, on that one card alone, on that one debt, you should be paying more than a minimum payment and as much as possible within your budget. So for example, with these three cards, whether you choose to pay the card one off first or card two because it has the highest interest rate, whatever card you choose, put any and all of your extra money to that one debt. Do not split it up between the three. I hope that makes sense. So in our example here, you could start with card one, which has the smallest balance. And that's actually what I typically recommend to folks. I tell them, like, if you have 4 or 5 credit cards and you're really trying to pay it off, try to attack the smallest balance first. Like, I want to get you a win. I want you to feel good about paying off something finally. So I typically recommend to my clients, just pay off the lowest balance first. And even though it has a higher interest rate than card number 3, again, this is a strategy that you can use just to get one debt knocked out. So then once you completely pay off card number 1, now we can apply all of that extra money to our card number 2. So you can zero out card 2, which has a similar balance to card number 3. But here, card number 2 has a higher interest rate. So again, this is why writing down information about each of your debts was such an important step, because it would help you to make a decision, which will help you build momentum as you start to eliminate each card one at a time. But again, we're doing that very strategically. And then as you pay off each debt, now you're freeing up income, because remember, we have extra money now that was initially going to card 1 and money that was going to card 2. Now we take all that money and apply it to card number 3. We call this strategy debt roll up. But again, as you spend up and as you free up that extra money, you apply it to the debts that are left over. You don't want to spend that extra money on eating out or new shoes. Again, you use it to create debt elimination momentum. Again, we call it debt roll up, by adding the money you were paying on all previous cards to your payment on the next one. And this will increase the speed at which you're paying off your debt. And, hopefully you're getting excited about that because you're seeing your debts being paid down. So you basically repeat this process until you're credit card debt free. Your goal is to have 0 balances. But remember, just because you paid off the card does not mean you should close that account. You do not want to close those credit card accounts. And the reason being is that from a credit score perspective, it's generally better to have those paid off accounts open and still reflected on your credit score, because you're showing to creditors that, okay, I can have credit and I don't max out every credit card or every line of credit that I have, and it'll still make you credit worthy and likely for creditors and lenders to extend you more credit in the future. So that fourth tip, which was stop charging and canceling unused subscriptions. I mean, many people, they stop charging things and they stay out of credit card debt just by putting their credit cards away. I've seen people actually freeze their credit cards in the freezer so they couldn't use them, out of impulse. Another way to stay out of credit card debt is just to use your debit card. I tell people all the time, like, to spend a day paying for everything in cash. You'll see how many things you'll think twice about buying when you purchase it with cash. Or just use your debit card because that'll pull money right out of your bank account right away. And then again, cancel any digital subscriptions like online streaming services, things that you don't use much, and just put that money, the extra money toward your debt payments. Trust me, that extra 12, 15, $20 in subscriptions will be better, used toward paying off your debt. And one way to lower your monthly mortgage payment is to consider refinancing. So that was the fifth tip. So again, if you are a homeowner, if you refinance, you can actually find up extra cash, pretty quickly, which can be used to accelerate your debt payoff. So in this example, somebody's mortgage before refinancing was $1,224, but now their new mortgage was only $1,098. That's over a $200 difference that they have in extra free cash that they can now use to go towards paying off their debt. And by paying on time, correcting the credit report errors and reducing your debt, over time, your credit score should improve. So you would be in a position where you can refinance and qualify for a better interest rate or even a different type of loan on your home so that you can, again, reduce your mortgage payments. So section 5, money milestone number 5 is increasing cash flow. I tell people all the time, there's no point in griping about, not having extra money. I say, let's figure out, how can we free up more cash flow? How can we bring more cash flow into the household? And oftentimes this means one of two things. One, you have to seek out ways to earn additional income, or you need to get better at managing your expenses and seeing where are you actually spending your money. So let's just look into that. Cash flow, in my definition, is the money that you have available to spend or to save that's left over, I would say, on a month-to-month basis. So let's say, for example, we, in our money milestones, and our process, we tell people, have your proper protection in place, establish an emergency fund, and identify money to pay towards your debt. And so once you've done all three of those, now you can really focus on how can we grow your income? Because now if you have more money coming in, obviously that can accelerate everything that you and your financial professional are working toward. So George here, he's a character in our book from the How Money Works, Stop Being a Sucker book. And you might feel like George, he feels like he's stuck when it comes to his budget and his finances. Most people that I actually do meet with, they generally don't spend more than they make. They're pretty frugal. They follow a budget. They're just like, I don't just have any money. I just need to find additional sources of income to come in. And that's really what most people need to do. They just need to go and, do something on the side to bring in some more money. So for example, with George here, he's like, well, I have this chili that I can sell. I'll see what I can do with that. So here's a couple things that I recommend to folks to increase your cash flow. First and foremost, create and stick to a budget. Always know what your expenses are and what your income can actually pay for. And then, when you look at what are you actually spending your money on, are those needs or are those wants? I sit down with many people time after time and I look at their budgets, and sometimes they're spending a good portion of their money on things that they actually want and not just a need. You really have to determine, if you're really trying to fix your finances, you really have to determine what sacrifices can I make, which means that everything will not always be easy. It will not always be fun, but the sacrifices are saving a little more money. Stop buying something that you don't necessarily need done. That's the sacrifice. Start thinking about what is that sacrifice that I can make for me and my family. The second is just to develop a written game plan. Again, you want to focus where you spend less money than you actually earn. Third is you can save spending on your car and home insurance. I think this is an easy one that a lot of folks can do. If you have car and homeowners insurance, you can actually choose to get a higher deductible and you would typically get a lower premium. So, like for example, with car insurance, most people just sign up for the $500 deductible default by default. If you actually increase that deductible to like $1,000, your premium, your car insurance cost would actually decrease. Now, the other side is hopefully you don't get into any accidents and nothing really happens to where now you got to pay that $1,000 deductible. But if you're like me, I've never been in any car accidents, Lord willing, nothing else will ever happen. So I'm paying, I have the higher deductible on my policy because I know that the overall cost can be decreased. Another thing that I spend a lot of time talking with people about is repositioning your savings. Most people save pretty much, I would say, a good majority of their money in a low interest savings account, typically at a bank somewhere. And I always say a bank is nowhere to grow your money. It's not any place that you'll get wealthy. Yes, it's safe, but is it really helping you? You're pretty much earning little to no money by having it sitting there. So I like to recommend different accounts that you could actually put that money in that'll give you higher interest earning potential. But think twice about that. If there's something you're interested in learning about, definitely contact me. I'll be happy to have a conversation. Another quick way to increase some cash flow is by dropping your private mortgage insurance, your PMI. And that's only if you qualify, because if you're a homeowner, and you should know that once your home reaches 20% of your home's value, you can refinance your loan without that PMI, because that is a pretty hefty charge that the bank lenders will add to your mortgage. So once you have, again, that value, that equity in your home, you could probably get that removed. And again, another way that you can free up extra cash flow. But always remember, talk to your financial professional, whoever you work with, and they can help you guide you through these ideas and more. And again, if you don't have a financial professional, I'll share my contact information and how I work at the end of the presentation to help you. Now, another thing that you could do and to really supercharge your cash flow is just by adding a side gig. I think this is a great way. We live in a gig economy now, right? Where everybody's doing something on the side in addition to their regular job, whether that's, driving Uber or, doing Instacart or working at, some retail store part-time. At the end of the day, doing something on the side, I think, is an excellent way to have additional income. And it's almost always a quicker way to reach your financial goals than just trying to spend less. Because again, as I mentioned earlier, most people are not really maximizing. I mean, they're not really overspending. They just need more income coming in. Like they're paying just for the bare bones as it is. So I think adding a side gig would just give you a quicker way to bring in extra income. And in fact, a recent survey found that 45% of US workers have a side gig, on average earning a little over $1,000 a month. So that's not bad, to do something on the side and bring in that extra $1,000 income. So if you don't have a side gig, maybe it's time for you to get in on that action, or maybe even start a business. There are a lot of low-cost business opportunities out there. As Steve Seabolt says, he's one of the authors of our books, find a problem that people have and solve it. I recommend, I know we have an employee course that we teach about how to become an entrepreneur, from an employee to an entrepreneur. But anyway, we talk about how you can leverage time outside of your day job to start a side gig or even to start a business. And then the goal is to help you that as your income increases, there could actually be a way where you might making more money in your business, and you can actually transition from being an employee. You can quit your job to becoming a full-time employer. And that way you can even make more cash flow. And, obviously have more control in that way also. But let's say a business, that's not for you. I know a lot of people who they just prefer to work for someone. They believe it to be more stable. In that case, you can actually adjust your W-2 allowances with your employer. What that basically says is that you tell your employer how much to take out in taxes every year that goes to your IRS. And so most people, especially right now, we're in the middle of tax season, right? A lot of people are like, yeah, I got this big tax refund. But all that really means is that you've overpaid the government. You've given them too much money out of your paycheck and they're just refunding it back to you. So you can adjust your W-2 allowances, meaning you can decrease your exemptions. And that way you can keep more cash in your paycheck every single paycheck throughout the year instead of that extra cash going to the IRS. I'm not a tax professional. You want to talk to someone about that. But one thing that I typically recommend is I tell people to maximize their exemptions as much as possible so that little to no taxes be taken out of their paycheck. And then at the end of the year, when you file your tax returns, most people are able to get enough deductions and credits that that tax that they would have owed and had to pay back anyway would be wiped out. So again, throughout the year, they get more money in their paycheck and they're not getting, they're not over giving any money to the IRS. So that's something that you could look at as well, again, as a way to increase your income that's coming in. So I want to just think about, how impactful to your life and income could it be to start a business? I truly believe in entrepreneurship. I'm an entrepreneur myself, because I think when you compare it in terms of creating an income for retirement, how would that actually compare to actually saving money? So we want to look at, earning money from a business, and then on the other end, trying to save money yourself. That's why we have the picture of the pig on the right side. We call this wealth equivalency, and it just gives us a perspective and an argument for the importance of creating cash flow by becoming an entrepreneur. So here's how the wealth equivalency works. You basically determine and think to yourself, how much would you have to place into an account that earns 5% annual return to equal the earning power of owning a business. So basically, let's say you wanted to save $1 million, could you earn that same amount of money in a business? So just kind of look at these numbers. So for example, let's say you earn just $1,000 per month in your own business. That's equal to saving almost $250,000 in an investment account that gives you 5% interest. So of course, if you think about, well, first of all, Shantae, where can I find 5% interest, to even accumulate that type of savings? And like I said, it's not in the average bank account. The average bank account averages 0.09%. You can't even get 1% at the bank. And in an average bank account, you need about $1.3 million to pay you the same as what a business would pay you earning $1,000 per month. So just think, which is likely to happen first? Would you likely be able to earn $1,000 in monthly income, or would you more likely be able to save, $240,000? So that's one of the best examples that I've seen of how money really works. But let's think even bigger. Let's really dream a little bit. What if you could build a business income on the side where you could earn $5,000 per month? The equivalent that you would need in savings to pay you that $5,000 monthly income at that 5% interest is $1.2 million just to equal that monthly income for your business. So you can really see how that changes the math. And that's really why you can't become a successful business owner long term without a basic knowledge of money, just like I'm trying to show you now. Let's look at some more examples. So let's say, as your business continues to grow and it becomes even more obvious that most people can never save enough to come, anywhere close to earning the power of building a business, and this is really the principle that I'm really just trying to have you focus on, as you start considering, other opportunities when we're talking about earning that additional income. I know for our company, we're always looking for folks who can be a how money works educator, just doing what I'm doing, teaching workshops. Because in addition to teaching people how money works, we teach people how entrepreneurship works so that they can really apply this knowledge to building a business that earns, far beyond any amount of money that you could earn in a savings account sitting at a bank. So, knowledge really is power, especially when it comes to your money and income. And really applied knowledge is power. You don't want to learn this information and not doing anything with it. You want to actually apply it. So as I mentioned at the beginning of the presentation, if you do not have a financial professional, I just want to take the last couple of screens to share how our company works with folks. Our mission is to teach 20 million families how money works within the next decade. We truly are going to stamp out financial illiteracy in every community. I know I'm very passionate about teaching, especially minority communities, about becoming financially educated, and that's a really huge undertaking for our company. And that's one where we have, it'll require a lot of people, thousands of how money works educators. So as I mentioned, if you're looking at opportunities or ways to earn additional income, I'd be happy to, tell you about our opportunity on how we're looking for people to help teach these classes. And that's where you or somebody that who, would like to do this work, where they can actually come in. But when we're talking about how do we actually help families, I just want to share, how do we work with folks? Number one, our company has a team of licensed financial professionals to go through all of these 7 money milestones that are listed in our How Money Works book. So at the back of the book, there's a worksheet. We call it a money discovery worksheet. This is the first step that we use in looking at helping families look at their finances and helping them to determine where they are with their finances and what areas of opportunities that we could assist them with. I have a PDF copy of this. So if you don't have a book, like I mentioned, contact me through email, however you got the invite to this webinar, and I'll be happy to get that to you. But I'll also be able to, if you just kind of want to fill it out yourself and kind of look at, from a financial perspective, what do we look at? I'd be happy to email a PDF. It's a fillable, typable copy that you can fill out on your own. And if you want to share that with me, I'll be happy to have a conversation with you about that. Our How Money Works, professionals, again, we have a lot of experts who are able to sit down with you, especially now that you've attended one of our Elements classes. Like I said, you get an opportunity to have a 30-minute consultation with myself or anyone from my team. One thing I want you to think about is, some of these concepts that I talked about today, how do these work with your financials and your personal financial numbers? There's a lot of people out there who give, quote unquote, financial advice, but that advice is not specific to you. You want someone to look at your individual situation. And just think, how much faster will you be able to go through those 7 money milestones? Those are literally the 7 steps that you need to go through to create a solid financial foundation for yourself. When you have an expert who's guiding you, you can pretty much accomplish those 7 money milestones pretty quickly. So when we sit down with folks, we do have, phone conversations to do a phone consultation. It's private, it's short, confidential. And that conversation is to talk exclusively about you and your financial goals. In the chat, if you would like to connect with me, I'm going to put in a link where you could schedule a 30-minute phone consultation with me to see how I can be a resource to you. Let me just finish typing this out. Okay, I can't talk and type at the same time. Okay, there we go. So if you're on the Zoom, I have a couple folks here on the Zoom with me. All the others of you, I'll share a link on Facebook as well as YouTube. So where you can schedule a 30-minute phone consultation with me. Again, it's just to have a conversation to see how it can be a resource. I don't promise anything. I want people to, number one, be comfortable with me. I also want to be confident that I can actually help you. So there's no obligation on my behalf nor on your behalf. Again, it's just where I can see if I can help you, if there's any numbers that I can crunch, any recommendations that I can help with you. And basically, my job is just to give you access to the best financial products and services that can help you when it comes to your finances. So again, the best way is to schedule a phone call with me using that link. And let's see how we can start putting your money to work today. So as I wrap up, I'm a little bit over, but first of all, thank you all for joining. If you liked what you learned tonight, and again, if you would like more information, you can follow How Money Works on Instagram at howmoneyworksofficial.com. Again, that's where you can get practical tips and helpful resources from How Money Works, I'll be happy to connect with you. I like to work with people who are serious about their finances. So again, thank you all for joining. Please stay in touch. If you're on my email list, you know that I send out tons of emails. I think I have another workshop coming up in another day or no, I think 1 or 2 next week. But otherwise, thank you all for joining and you have a good rest of your evening. Bye now.